based on the report card here, we're showing that you guys are still encouraged by the numbers that came through in the first couple of months this year. The strategy is on track, but it was a decline on year. Can you talk us through how things have been so far this year?
Yeah, look, we're very pleased with the results that we had overall. I think when you look through the numbers, good top-line growth. We had lending growth of over $20 billion in the quarter. We've started to see the benefit of rate rises coming through. This is our best net interest margin since the first half of 2020. And costs are under control. We took costs down 2% year on year. So overall, very pleased with the numbers today. I think the two areas that sort of impacted profitability. The first was the wealth franchise, particularly in Asia, on the back of weaker markets and COVID restrictions in Hong Kong. And secondly, we've started to see the normalization of credit. So last year we had significant write-backs. This year we've taken about a 25 basis point charge for expected credit losses. But if you strip those two things out, I think the underlying numbers were very strong this quarter.
You're already starting to see the benefits of interest rate hikes. Now, we are expecting liftoff with the Fed funds rate. We're looking to Jay Powell at the meeting next week and already calling for 50 basis points that he is saying that is already in the cards on the table. How much is the Fed funds rate are you expecting by the end of this year, and what is the benefit to your net interest income projected? Where do you see rates by the end of this year?
Yeah, if interest rates were to move up about 100 basis points, that's worth about $5 billion of additional net interest income to us over the next 12 months. So we're very positively geared to a raising rate environment, actually far more than most banks because of the nature of our balance sheet. So we are expecting the Fed to raise rates by 50 basis points. So overall, I think interest rate rises is going to be a big theme underlying the momentum in our earnings and returns over the next year.
Now, with this rising rate environment and a surging inflation, how is that going to be impacting lending confidence?
Yeah, so we've been waiting for some time, I think, to see the COVID bounce. We are seeing in parts of our franchise growth. The mortgage franchise here in the UK and Hong Kong continues to be very strong. We've seen very, very good growth in our trade franchise consistently now for a few quarters. But more pleasingly, I think in this quarter, we've begun to see corporate confidence returning and the beginning of more broad-based corporate lending. The corporate sector has effectively been deleveraging now for a couple of years, and we are beginning to see some confidence come back.